What's up, everybody? Good morning, good morning, good morning. So yeah, like I said earlier in the week, we wanted to make sure that we monitor the bar chart information because we are in a transitional period where we're going from the first quarter, which is it's from December 16th to March 16th. That has passed, right? The week started, and how we gauge, when the contract months change, we have to look at the open interest on this website, right? On barchart.com. We could see now how the June contract now has more open interest, which essentially just means open orders or participation or whatever. You don't got to get too technical with the understanding of what open interest is and all that, but you can see now that the March contract, which is what we were trading, you can see now that has became less than the June contract. And if we just fluctuate through the other two, you can now see that the June contract in ES has also changed. Okay. So actually, let's do this real quick. Let's actually go do a commitment of traders analysis because I've had it for the other day. It may take like a week or so for things to update, which is another reason why I said one of the rules is when it comes to new quarters, when we go into a new quarter or contract month, the week before, the week of, which is right now, and then the week after can generally lead to more difficult conditions to trade. So again, it goes back to the question, when do you trade, when do you not trade, when to relax, and when to really put the pressure on. So since we're in the week of, I'm done and everything you asked played out. Yeah. See, I'm telling you. The mindset that we go into every week with, it's very consistent. And then if it's incorrect or does something opposed to what we assume, that is critical intel, so then we could be comfortable with adjusting. But yeah, so I'm going to just showcase, normally I do this just with my private community, but let's do it right now because I think this is a very important element to things, and we don't have any news till tomorrow, so we'll be taking it easy, but we're still going to look for opportunities. We're just going to let the actual open in about an hour come into play, and we'll use that to gauge our overall manipulation. So yeah, you come to whatever asset, if you trade the indices, right? So we'll do a quick COT analysis, like I said, so you guys can get the gist of it. Because a lot of people see this as extremely complicated, which is why they don't use it, which is kind of ridiculous. If you're just looking at ICT stuff at face value, COT seems extremely complicated. Like open interest itself, right? With this little purple line. People hear that, they're like, I have no idea what that is, so guess what? I just want to see an order block. And they totally disregard it. Not knowing that this tool, although it's a lagging indicator, it takes a while to show some of the data that it presents us. It takes, sometimes a couple weeks for it to actually show in the chart. But once it shows, and you could align COT with seasonality, your analysis, just the process that we employ, it's just it's an extra layer of building trust, right? That's the key elements of why I'm on YouTube or do anything publicly. It's to help highlight the elements that allow for traders to trust things. Okay, so yeah, we'll start here with the S&P, and you want to get this volume indicator, open interest indicator, and take off the volume, right? Because we don't care about the volume. Volume, doesn't matter. Doesn't matter volume, right? What matters is the interest for price to get to particular levels. And the participation and open interest amount is very impactful to show you where more action is taking place, especially when we're adjusting from one quarter to the next. So yeah, you'd want to go to the asset on barchart.com, right? Select your commodity, click the S&P or whatever you're trying to analyze. We're going to do all three right now before the open starts, because I have the COT I shared with my private community, but because we're now into a new quarter, we have to start getting a feel for what this looks like so we can observe when a change takes place. So yeah, so to get the COT on there, the indicator that we use to identify that data, COT is a lagging indicator, like I mentioned, but or it's a lagging indicator because they don't adjust or update the data every minute, right? It's not like a continuous every minute type thing. It's like every week or so, the large funds have to update the positions that they are holding or involved in, and as a result, that's what changes things, right? So yeah, we don't care about small specs, we don't care about large specs, so we'll just apply that. And this is very interesting, right? This is very useful information just right off the bat, right here. All right. So let me just full screen it real quick. So yeah, again, we are going to wait for the open to give us data, right? To give us manipulation, like a gauge of manipulation. So I'm going to just walk you guys through this. Again, normally I save this for my private community because, most people that I teach this to aren't even going to use it anyway. But I know that some of you, like Tony, I know you guys could probably get some usefulness from this, right? So yeah, we'll get this. And we'll move on to the Nasdaq. Pull that up real quick. Again, look at the open interest. It's not quite there yet for the Nasdaq, but nonetheless, the other two are, right? And this is close enough, right? So pull that up. All right. Full screen that as well. You'll see why I'm putting them in their own like full screen tabs in a moment. All right. And I'll explain why COT is important as well. Why do I even do this? Why is this even worth my time? I'll explain that in a minute. All right, so we'll pull that up too. If it'll go full screen. All right, so minimize that. So yeah, I'm gonna put all three of these next to each other real quick. All right, so what is being shown if we find the COT data showing us that, there's buying or selling interest, right? What is the importance of that? What is that actually showing us besides, is smart money buying or selling? Well, when we see one of the two signatures that I'm going to show you guys here, whether it's going to be one of two things that's being shown. They're either offloading their buy positions or they are offloading their sell positions, right? If they're offloading their buy positions, it's more than likely that the interest is going to go from bullish to bearish soon. And of course, we can add on SMT on the higher time frame and then seasonality and quarterly shifts, right? or adjustments in quarters. We can add that on top of that data if we can identify it. And I'm going to show you guys how to identify that here, because that essentially is the importance of understanding COT, at least from my view, right? You can make it as complicated as you want to make it, but I just want to know whether they are offloading shorts or offloading their buys. Because if I can get that data, although it's a lagging indicator, if I see something change in the technicals overall in the asset I'm observing, which is, either the S&P or the Nasdaq, then I can, again, build trust. I can add another layer of trust to a particular narrative that I'm trying to observe. Okay? And sometimes COT is not going to be in alignment fully, because again, it's a lagging indicator. But when it is in alignment, it makes it very refreshing to be able to get into a position or look at the overall vibe of the market and then be able to trust it even further, because there's that extra fundamental back end that we're able to add on. All right. So yeah, so what tells us, based on the open interest of a particular market and the COT line or data in a particular market, what shows us that they are either offloading their buys or offloading their shorts? Well, come over to my awesome private community and I pull up the little chart, if I can find it. All right, well, hope you guys could see this okay. Let me know in the chat if you could see this all right. Not sure if the fonts, it should be okay. But let me know in the chat if you could see this okay. Clear? All right. Cool. All right, so the open interest and the COT, right? The open interest is the purple line and the COT is the red line. Okay? So when we see the open interest line going higher, right? Open interest going higher, this is a dramatic increase, right? So when we see dramatic increases like this with dramatic decreases in the COT line, that's bearish. That's them offloading their buy positions, right? Or you could put it in the other context, they're just continuously interested in downside objectives. There's not much interest in buying taking place right now. Okay? So we look at this and we take that information and we go to the chart, right? And we could see that is very much in line with what we're seeing in price. So what does that mean? That means, shorting is being supported by COT, right? That's also being supported by what we see in the chart. So given that fact, we need to, again, see some serious evidence that shorts are not of interest. And you just take that same information and you do it for the other side as well. If you're seeing the open interest drop dramatically, like we did see here, and then you can see the COT rising. If they don't align with one of these signatures, at least from what I've experienced, the COT just isn't useful at that moment, right? It's only useful when it's useful, right? When it's showing you the data that we want to see for the tool to be providing evidence. It's the same with like all the PD, like a good analogy is like the PD arrays ICT teaches, right? Not every single PD array is valid at every moment. It has to be in the chart, and you have to be able to observe the particular PD array that's relevant to that time. It's the same situation with COT. It's only useful when you see things that are useful, that can align with an assumption you're making in the market. So at the current moment, there's an interest for shorts, right, based on the COT data, along with the technicals in the overall chart, right? Now, if we were down here if we were down at these lows like this, and there was a bullish signature taking place, that's showing you that they're probably offloading their short positions, right? Because there's an open interest COT relationship that is providing evidence that they are potentially going to be interested in buying and offloading their shorts because there's that bullish signature, right? And then of course you can couple that with a PD array, which on the higher time frame, which makes it even more powerful. And then if you can also see maybe SMT supporting that idea, maybe there was SMT at the lows. I believe there is in some capacity. But again, if you see like SMT at the lows here, if it's in a downtrend, and you see the bullish open interest CO2 relationship signature showing with this data, and prices dropped and hit a logical level that could maybe bounce price higher, that is a pretty good indication that price could have a strong response from that PD array. Okay. So it's as simple as that, right? With what I just mentioned. That's all I personally use COT for, right? And again, it doesn't need to be overly complicated. I hope that was a very simplistic way of talking about COT, because I can take it way further and make it extremely complicated, right? But it doesn't have to be that way. It's similar to the intermarket relationships. You can make it extremely complicated. You could try to figure out what the interest rates affect, right? Mortgages and credit card debt, or the interest rate on credit cards. You could dig into all the technicals and make it extremely complicated for yourself. But all we really need to know is the relationship, right? What is that impact? Well, how does the relationship between these other assets impact the indices or the asset you trade? That's all we need to use it for, right? And again, it's the same with the COT. What is the signature showing us with this data? What can we decide, or what can we determine this is, either going to negate or support, right? Is it going to support offloading buys or sells, right? Or is it just continuing to have an interest in them, in this case, dropping, right? So this data showing us what we see here makes me feel like we are not done going lower, right? Obviously, we'll see if that's the case, but so far, everything looks pretty much in line with price wanting to go lower, right? We also see, we're at an area where price could respond. If it gets down below this fair value gap here, then, maybe that'll turn to an inversion, and we could continue to use it as a possible framework to go lower, right? So we got that backed up with COT. We have the start of the week rallying. So if we're looking for a bearish week to continue this downtrend, we also have COT supporting us. But if we're looking for this to drop, we wanted it to go higher, like I mentioned at the beginning of the week. Because guess what? Power 3. Right? So it doesn't have to be complicated. And look, if this was to be disrespected and things were to start rallying from this area and go deeper, we're still not done going lower. We still need our validation and validation to kick into place, right? That's 3 PD arrays, intermarket relationships supporting the idea that we're going to turn around, right? From the interest rates to the DXY to what the currencies are doing, so on and so forth. The commodities too, you can add gold or silver or both. You could even look at wheat. You could look at the grain markets. You could look at oil, right? Different commodities. But again, you don't have to make it overly complicated. I don't necessarily use all those other commodity assets. I just use a couple of them. So I look at gold, I look at oil, I look at silver. I just glance at them and see what the whole vibe is. There's also an index that you could look at, similar to how the index is here for the stock market. Just takes all the interest or all the different important assets, and it gives you a gauge on the overall stock market. Well, there's also an index for the commodities, right? It's called the CRB index. All right. So I'll leave that to you to go dig into. I do not trade gold. I literally only trade specifically, nowadays I'm mainly trading Nasdaq. But if I don't trade Nasdaq and I want to find an opportunity in something, I'll glance at the S&P. And if I can't find something in both of those, I'll just take the day off. because you want to be a specialist. If you trade gold, stick to gold, right? You got to understand when you decide to trade a market, you got to build a relationship with that market, because everything has a characteristic to it. You know, they're like personalities, and they all have different things that impact them. And you only need one model, one asset. And with the way that we do analysis, the way that we break things down, studying things like this, studying the relationships that other markets have on a particular asset we're looking to trade, you can seriously get to understand the market that you're trading. And the better you understand the market you're trading, and the more you understand the model you're trading with and how it delivers in your particular market, the less stress you're going to deal with, because juggling 5 things at once is a lot harder than just juggling one thing, right? And then really understanding that one thing. It makes it more consolidated, you know. And, you know, there's an opportunity in every market, every day, right? Doesn't mean you'll find an opportunity every day, because if you want to be disciplined and find things that work for you specifically, things that are very much repeatable. You don't want to be stretched too thin, because if you're looking at every asset, trying to trade every asset, you're going to stretch your mindset too thin. And then, you'll miss more opportunities. You'll have analysis paralysis, and, you'll just make it harder for yourself. You don't got to do that. All right. So yeah, that is, let me take a screenshot of this real quick. Right, so yeah. So as always, let's start here. We're going to dig into tomorrow. We have an FOMC and rate announcement situation as well. So again, we're going to want to be very cautious going into tomorrow. Today there's no news, so as always, if there's no news, we wait for the 6:30 open. That'll provide us evidence for manipulation, potentially. Then again, it may not. It may just not do much today because it's anticipating tomorrow's trading. Because that's the case, and that's generally how the vibe is ahead of news events like federal fund rates. It's going to adjust the interest rate markets, so that's going to have an impact here. It may be the catalyst that kicks things back into symmetry, which is what I'm hoping for, because we've had a really cracked overall correlation between specifically the indices and the bonds. It's somewhat starting to get in line with the overall situation going lower. And then, of course, now we also observe COT is supporting the downside delivery. There's no evidence, at least yet, that they are offloading any short positions. Seems as though they're continuing to favor short positions. And, things are in a rough patch right now for the U.S. economy because of all the adjustments taking place, which for the most part are needed for the health of our economy. Eventually things will be back to normal, right? But yeah, for a little while, we're going to have to deal with some chaos, but it's all right. It'll be okay. Again, it doesn't mean there's no opportunities. As you guys can see, there is continuously. And I assume that today will most likely be no different. But because there's an elevated risk profile, we're going to keep our risk minimal. 1 to 2 trades. My risk exposure is going to be half. So normally I risk 1%. It's going to be 0.5% for each trade. And if I take a loss, I drop my risk. And I'm not going to be in a rush to take another trade if I do find one and take a loss on it, which could be, given the potential for sloppy price delivery today due to the federal fund rate coming out tomorrow. It's going to be very impactful tomorrow. Okay. They're probably not going to change much, so it may not be like a crazy change, But I do think that tomorrow can be used for, price to get back in symmetry overall and start giving us a little bit more correlation, trustworthiness, specifically with the indices. But again, I don't think we're going to go lower. I don't think we're going to go higher in any meaningful capacity. If we do, we came back up here. Look at, we hit this wick. Price from yesterday couldn't even get to the midpoint of that wick. That is indicating to me that we are still pretty interested in sell side. Nothing has changed. This order block here, once it was violated, it was used as an opposing PD array to initiate the retracement to the wick. We did blow through this fair value gap. So we'll see if it stays above this daily fair value gap here. Price will, potentially want to reach a bit higher. I'm assuming that, we're not going to see that. But if we do, I have no problem in adjusting. It's part of being a trader, flexibility, and understanding when being flexible is permitted. And again, that's a lot of the stuff that we talk about here with validation and validation, what supports a particular direction, and just our overall process as a whole. Right? A lot of what we do, pretty much everything that we do, is trying to help us identify which side of the market's trustworthy. And those of you that have been here for a while, you see that there's a lot of validity in what we do. So yeah, let's see. So yeah, I'd like to see this go down to here. I'd prefer to see us break through that. We notice that the interest rate markets have been in a range overlapping. That is an indication of high resistance, low probability, and we've seen some evidence of that in the other assets too that are affected by the interest rate markets, which are pretty much everything. So because of the interest rate markets looking the way they do, they're kind of back and forth, overlapping, stalling, like distortion. Because that is the case in both asset classes, the bonds and the yields, that automatically puts us in a mindset of higher risk environment. Okay, and then you set aside the fact that there's a correlation issue. There has been a correlation issue for a couple of weeks. Again, it's just adding on to the assumption that we need to keep our risk minimal. We need to be very cautious about what we're doing, because I've gotten so many messages over the last 2 weeks of people over trading and blowing their accounts, and it's unnecessary to do that. What is the rush? I know life could be difficult, but if the worst thing we could do is trade from a place of lack or demanding that things change for us overnight, it's counterproductive, and it's not going to happen. I don't care who you are. Okay, winning a trade today won't catapult you to richness, but losing a trade can definitely take you down to the depths of doubt and regret, and then that could last for weeks. So the risk to reward when we're comparing winning a trade today or losing a trade, it's the risk is a lot higher, right? The damage from taking a bad trade or a bunch of bad trades, breaking your rules, not being disciplined, versus taking a trade and winning, the damage is going to be a lot deeper, and the impact is a lot deeper in a loss because it's a negative situation. And the positive vibes, right, the good streaks that we have, the good feeling lasts for a very small amount of time, because then we're looking for the next thing. But when we take a loss and we overtrade and we break the rules and then we start to regret things, that lasts much longer. Like the downside for the negatives have a lot stronger impact than the good sides, the good vibes, and the good streaks that we have. I don't know why it's like that. Maybe it's because of negative impacts, negative situations. We're kind of hardwired to focus on those more, because in nature, obviously, before we had technology and we were in the Stone Ages, a lot of times we'd be focused heavily more on the dangers in nature, because we were trying to survive, right? So it kind of carries the nature's instinct kind of carries into the present. you know. So again, understanding that that's the case, it just adds on to another layer of like, we need to be cautious. We can't let the downside and lack of discipline continue to stick in our performance, because by default, because of nature, it's going to be more focused on. I was thinking about what you're saying, and what specifically were you thinking about that I said, brother? It's kind of vague. I do say a lot. I talk a lot. Yeah, I hope that makes sense, because that's why losing hurts more than winning feels good. All right, that's why losing lasts longer. The feeling of loss and the emotions that come with that stick with us a lot longer than, you know, that 200-point run that we got a couple months ago or whatever, whenever we got it. So that's just because that's the case. You got to make sure that you're not getting crazy. You know, by default, we're behind the 8 ball, right? When it comes to the impacts psychologically that our actions will have on us in the markets. So again, that's why rules are so important. That's why we do what we do. But yeah, so I'm assuming that, you know, I set these levels the other day, the fair value gap here and the high, volume imbalance. So if we were to get above that and use it as support, then obviously that would support the yields going higher. If we stay below it, looks like we've layered sell side. Excuse me. Seems as though that's the case. We'll see. If we want the indices to go lower, I'd prefer to see this go higher, because that would support downside in the indices. And then of course, as a result, I'd like to see this also do the opposing view, break down below here and attack the sell side. I don't want this correlation to keep being in play, right? This positive correlation. These are two asset classes that are negatively correlated. So if this is going lower, which supports lower indices, this should go higher. And we need to find evidence justifying that. We now have COT to also add to this, showing interest that they want to continue to drop. So, you know, unless that changes, we're going to continue to support that. And every rally we see in the indices is just a rally to go lower. You know, they took external liquidity, now they're seeking internal range liquidity, right? And if they drop here and then they break this high here, that starts to show evidence that things may be changing, because it should go from external to internal back to external range if we're in a healthy market. If it goes from external to internal, then back to internal again, and say it breaks this high here, that's not something that supports price going lower in that moment, in this case. When you change over contracts, do you transfer things like, yes, 100%. Or do you search them up? I mean, we definitely search them up and glance at what they look like, because the reason we change contract months and we don't, I mean, you can trade the continuous contract, right? So that you don't have to worry about what we're talking about here with the overall quarterly changes. The problem with that, though, ICT's mentioned that there's gaps that we don't see from that data feed. So that's why we have, if we trade futures, we want to make sure we're trading on the contract month, because, you know, there's areas in price that are going to be impactful and important to us, like new week opening gaps, volume imbalances, regular trading hours gaps, and, you know, different things like that, new day opening gaps. We want to be able to see those accurately. And if we're in the previous contract month, or if we're in the continuous contract month, or contract, the continuous asset, right, that doesn't have the contract discrepancies, we'll miss some of those more updated, more recent levels. And we don't want to do that, right? It's not like I know some traders that trade the continuous contract because they don't want to deal with it, and that's fine, and they do well, you know, but I don't know. I like very current data, right? And it's not like a make or break thing, but it leaves out some information. That's why we want to make sure that we are in the proper contract month. But yeah, when it comes to the different levels that we have on a previous contract month, we definitely want to try to transfer it over as best as possible. It starts you on a clean slate. But yeah, you want to still keep some of the stuff from previously, but you get to the current one, there may be some more stuff that you can add on. Obviously, it just started, so things should look fairly similar, pretty much exactly the same. But things could be having discrepancies, and you avoid the discrepancies by being in the current contract month. But yeah, everything still transfers over. So yeah, like I mentioned, my assumption is that this went higher to just start to seek lower prices again. Okay, and it seems as though that's showing to be the case for now. So we'll see if that wants to continue to be the case. Looks like this was consolidation for Sunday, Monday, manipulation into part of or the end of Monday. Right, last night failed to get up into this area, so this high here acts as an intermediate term high. Okay, so as long as this high stays intact and this high stays intact, I mean, it could wick up here and even blow that out and then go lower. I don't think it's going to do that personally. I still think that we're going to drop. I have my eyes on this equal lows here. Then we also have a fair value gap mixed with that, so that makes me even more confident that this will, in fact, be the target for today. That's assuming that Power 3 is going to continue to unfold bearish because of the bearish overall direction. The narrative is bearish. This rally up was example of bias changing from time to time, right? Bias inside this bearish downtrend or narrative. Bias changed from bearish to bullish just to retrace, get us up to the daily fair value gap, run out the highs, attempt to come back into this breaker here. It's also a down wick in the midpoint. It failed to get to that on that daily chart. As you could see here, it failed to get to the midpoint, so it hit the lower quadrant. Because it did that, and we also have all these other things like COT and just the overall sentiment is bearish, we can faithfully trust that this is going to continue to go lower unless this intermediate term high is taken. Right? This should stay here. Why is this an intermediate term high? There's a high here, lower high to the left, lower high to the right, and it's inside of a fair value gap in a downtrend. So this is a bearish intermediate term high. So unless that's violated, okay, we're going to continue to see price go lower. And there's another intermediate term high here, more recent. Right? And now we're almost back below this daily fair value gap. So we'll see if that continues, right? And of course, if things change, like maybe there's a displacement above and we end up taking out this high, my eyes will go directly to this high, and then I'll be able to get in line with short-term buys. Of course, that would for that moment be counter trend. So of course, I would drop my risk as always, because that's the protocol. But as we continue to go lower, we're just going to continue to favor the downside because there's no evidence yet showing us that this is going to stop. I mean, we have many elements, including the Power 3 delivery we see, that we could reasonably make an argument that price is still going to drop, and we have very obvious targets down below us, being these equal lows. We have this trendline liquidity here. We could even draw an assumption all the way down to the lows down here, because these are equal lows as well. All right. So yeah, I hope all that makes sense so far. And if you guys get value from this content, definitely share it with your friends. Maybe you have someone that wants to join the conversation. I'd love to have some of your guys' friends join versus, a bunch of random people, right? I just think it's better that way. But hey, random people are welcome too, right? As long as you're serious about trading. And if you get value from the content, definitely don't forget to subscribe and like the video. It's much appreciated. But yeah, so we could see this is a previous, this right here is a previous AM session low. So before it gets down to even these equal lows, an even closer near-term target we could identify as this low here. It's a previous session low. And then, of course, we have previous day's low down here, which is this sell-side liquidity pool. So, yeah, I mean, you could make the argument that this is a relative equal low too. Because there's no news, again, the rules, for me at least, are that I like to wait for the open to take place. Sometimes I'll miss moves because of that. Like, I'm assuming that if I go down here to the 1 minute or the 30-second, there was probably an argument to have taken a trade from here down to this low, or from here even down to these relative equal lows. All right, let's go drop down and see if that's the case. All right, well, here it is, right? Run on stops, shift in market structure, fair value gap, going into the macro. If that was missed, this one was in the macro, 550 to 610. Right, so sometimes the rules will make us miss trades, but look, do I sound concerned? Right? Do I sound worried? I'm not worried about it, and you shouldn't be either. All right, so yeah. Overall, we can see that the analysis, assuming price is going to go lower, assuming that these highs up here are going to stay intact, and the fact that these lower targets are going to potentially be met, everything we're seeing in price so far is supporting that idea. London rallied up, so not only is there a potential bearish weekly power 3 underway with the consolidation, manipulation into on Monday going into Tuesday, and then now we see this drop here. If we go to the lower 5-minute time frame, or the 5-minute, we could see how there's the same phenomenon happening, but now on a daily candle perspective. The run higher here through London was a manipulation for the daily range, at least from what we see right now. That's what seems to be the case. Going into the New York session, we see pre-market has dropped, and then it offered that opportunity that I just mentioned. All right, and it's still delivering in a bearish capacity, supported by what we looked at earlier, which is COT. But on top of that, the technicals and things that we've been able to understand from the technical perspective, right? Overall with this asset, everything is showing us downside is still being supported. We look at the 3 PD arrays from where price is at, above price, right? We look at some of these higher time frame levels, and we can see how it's respecting these levels, continuously supporting downside delivery. All right, we see the failure to get up above this high. We see that strong displacement. There was an opportunity here in London for a short. But yeah, everything's supporting the assumption that price is going to go lower. So we have no reason to worry about trying to take a buy or think that things are going to change unless something changes. Now, if we get a strong displacement above this high and it starts to show little to no respect for these levels up here, then again, we can start to think about adjustments. But unless that takes place, unless something is violated and the overall delivery starts to change, we're going to stick to downside delivery because that's the higher time frame narrative, and higher time frame's king. All right, here's a fair value gap in here. We're inside of a macro. I'd prefer to see us go into the open. When we open up, I'd like to see price maybe come back and purge these people out, and then try to set us up with another opportunity. But yeah. So yeah, I hope all this stuff makes sense so far. If you guys got questions, obviously, as always, let me know. We are at this current new week opening gap here. So let's see how price behaves around that. You can see the fair value gap in here. And just because I missed this opportunity because we were, looking at something else, and the rules for me are when there's no news, I wait till 6:30. Doesn't mean you are by default forced to follow that and miss the same moves. You can think independently, and if this would have made sense to you based on the things that I just described to you, and it fits your model, maybe use the YouTube model, there's no guilt that should be felt with you taking an opportunity like this that wasn't mentioned, right? Like as it was taking place. The narrative has been bearish. We're going to stick to that, like I mentioned, until proven otherwise. And we may not be proven otherwise, you know. So I'm going to continue to identify moves that take us down to this low. If we get real excited today, I'd really like to see us get down into here. This is my weekly target for today, or for this week. Well, for the next couple days, I should say. And then overall, maybe we get excited enough to have this whole move turn into a large range expansion down to these equal lows down here, continuing the overall short. There's an argument to make with this consolidation down here, right? This whole area. You know, price ran up. This could be a first stage distribution. This could be a second stage distribution, right? This could end up being our smart money reversal. And this could end up being a market maker sell model, right? From this time frame, right? If that makes sense to you, if we roll up in the time frames and we go look at the daily chart and observe that characteristic, right? The characteristic being, you know, price has retraced on this higher time frame to possibly go lower. That whole movement that I just showed you on that 4-minute chart, 5-minute chart, identifying a potential market maker sell model, right? Take this information and go look at what the higher time frame daily chart did. When price retraces into a premium array, if we're in a downtrend, your eyes or thought process should go to, you know, this low and think of this as a market maker sell model possibly. Obviously, that's assuming that the downtrend is going to continue, right? And if you can do that and get comfortable with that thought process, I mean, that in itself shows you why I love market maker buy and sell models. It puts details in a deeper understanding as far as what's happening inside of a retracement that could either continue, and if it fails, that also shows you information, right? That gives you the ability to, again, be flexible potentially. That's on top of the validation and validations that we do, and you know, just the overall analysis processes that we operate with. Right, so I hope that makes sense. That's a huge gem that I just gave. It's probably going to fly over many people's heads as far as the importance of what I just mentioned. But yeah, it's very interesting. When you see a bullish retracement in a bearish market, think market maker sell model. The rally up that's providing the retracement is the left side of the curve, or in this case, the buy side. Okay? And the next right side of it, once we hit that level, should be looked at as a smart money reversal positioning, like point, right? And then if it can provide evidence that that's going to continue, I mean, you continuously build confidence as price delivers within that framework for price to go in this case, to the downside. And then you can just operate accordingly each day within that higher time framework, that being the retracement to go lower, and then you know, break things down even more specifically when you go down to these lower time frames, while being rooted in that higher time frame understanding, right? That being the retracement on the daily higher to just end up going lower. And this happens all the time, right? You could find this happening every week, and the better you get at that, again, it's a clarity building tool. And that's not even identifying market maker buy and sell models as an entry tactic, because that could be done too. Each phase of a market maker buy or sell model, in this case a possible market maker sell model, each phase that you can identify, your model, whatever that is, breakers, order blocks for value gaps, YouTube model, turtle soup, you know, whatever the case may be, can be found in each phase of the market maker model, right? And if you could find a market maker model on the higher time frame, if you can identify the framework of the retracement or even a continuation, and you can identify the phases, you know, you could really start to navigate things in a pretty savage way. So yeah, let's go to the 5-minute. See, I really like this here. right? Notice how we're still supporting the downtrend. Prices, I wish this would have waited till the 6:30 time. But, because now we're going to, if this continues all through the 6:30 open in 20 minutes, then we're going to have to just look at things from a continuation capacity, because this may end up being the initial move that ends up getting us down to here, right? I'd like to see levels get left. I don't want it to be so excited that it just exhausts everything. Sometimes that takes place too. And again, you'd rather be disciplined and deal with the pain of discipline versus the pain of regret and impatience, because the pain of discipline keeps you in the game. The pain of regret a lot of times will be, as a result of you blowing an account or removing yourself from having the opportunity. So yeah. You guys have any questions about anything we talked about this morning? Let's see how high this initial intermediate term high goes. Yeah, let me know if you guys have any questions. We're approaching the 6:30 time, so we'll see what price has to offer around that time. So yeah, we got this 10-minute fair value gap. Again, my interest is downside. Given what we've seen, I mean, it's just beautifully showing us possible bearish power 3. The open is here. Right, we had a small wick to the downside. Now we've created a wick up here, which could be the high of the week. Obviously, that came up, attacked buy side in a downtrend, and now we're starting to present more delivery for the expansion phase, potentially favoring lower prices still. My target is here, and these lows. And if it gets super excited the rest of the week, maybe we could see price get us down into this level. It may not be that clean, because remember, the week before, week of, and the week after a quarterly adjustment or contract adjustment, which is what we're seeing from first quarter to second quarter, a lot of times it can be a little bit difficult. It could be a period of time that needs to pass in order for things to just get back in alignment and have smart money position themselves in the new contract month. Yeah, I like this 10-minute fair value gap here. Let's see if that can continue to stay in price. Let's go to the 15-minute. Let's go to the 1 hour. Now, if price gets below this low here, if no opportunities are taken in here, which they haven't been, I would like to see this here act as a bearish breaker. So this, if it turns into a bearish breaker on this 1 hour time frame, let's see, is it on the upper one too? Yeah, it's going to be on the 1 hour. So if we could see this get violated here, this could end up being another framework. All right, remember, this is potentially going to be looked at as a market maker sell model here, targeting us to get down to the lows here. As a result of this daily retracement that just ran up to a premium and has now pretty much responded away. This here would be a shift in market structure back in line with the narrative going lower. Okay, if it was to violate that, and also we have this inversion fair value gap, remember, I want to see it stay below this inversion fair value gap and this intermediate term high up here, and preferably leave this 10-minute one available as well. Some of the stuff that we already talked about, right? And of course, I'd like to see this stay as the high of the week. If it doesn't, and price ends up violating these levels, my eyes go to these highs up here, and then I would trade in that direction. But if all this remains, we have sell side, very obvious sell side target. We've kind of cornered the market in terms of the analysis, right? What should happen, and if that doesn't take place, how can we adjust, and what would the targets be in that case? But if this low here is violated, this now becomes a breaker, a bearish breaker. And then as a result of that, I would like to see the midpoint of that hold. If that gets violated and we get back above that, I don't have to see it break these highs up here. That would be enough for me to then start targeting these highs, right? So there's a lot of if this happens, then we do this type of scenario. But again, that's all contingency if that gets invalidated, right? That's all the backup plan. The initial plan that we want to see is price continuing to go lower here, assuming this will be a bearish power of 3. Price ran higher. You could have traded this run higher, assuming that it was going to be a manipulation to continue to go lower. Obviously, you could have found an opportunity with that school of thought. And this is repeatable too. The things I'm talking about here, you can repeat this process, this type of analysis, these like identifying these particular things. This stuff is very common, from power 3 to breakers forming, using the higher time frame, making contingency plans based on our overall process of validation and invalidation. It's repeatable. A lot of you guys that have been here for a while have been able to see that, and I'm glad. It's pretty much the point, right? I don't want you to be like super confused. I want it to be fairly simple to understand. But yeah, so I'd like to see it do that. I'd actually prefer it to do that, so then I can be more sure, and then try to find my whatever model I want to operate within. Once that forms, if price could return back into it, maybe if I go to the 1 minute or the 30-second chart, I could find the YouTube model performing in the context of what I've just described here, and then end with us attacking these lows for today. But yeah, this is my target. This one and this one are my 2 targets for today. And then if that can take place, we'll kind of see what price will do as a result. Overall, I'd like to see, if that takes place, I'd like to see us then start to really ramp lower and start attacking the lows, especially with the COT we talked about, with that whole process. If you weren't here early on to see that, definitely rewind or watch the replay later and go see how we do COT and how simplified it can be. It doesn't have to be complicated. Okay. But yeah, it seems as though things are staying in line with the assumption we made earlier, right? We have this being respected here, still marching towards that low. I like to see what we see here. This could be an example of a continuation YouTube model, right? If in the context of what we just talked about, price is declining, right? If it's going to stay in line with that, then this should respect this fair value gap. You think about the rules, right? Say this was the opportunity you wanted to take initially, which obviously it was there. Say you missed the move, right? This is what you do, right? You have the higher time frame context, and then you go in and start to study the rules. You reset the rules again, and then you try to see if things can get into alignment, right? And you see this here as a run on stops. Shift in market structure, right? It's going to have to hold this fair value gap. Otherwise, it may dig a little bit more. But if this was going to go lower, and say we were after the 630 and we wanted to participate, this would be an example of the continuation variation, right? You see the rules taking place on a smaller scale. Right? And again, that may be an opportunity that presents us with a short here. because of my rules, I'm going to miss, similar to how I missed this one, I will end up missing this one too if it delivers, because I didn't want to see this take place before the 6:30. I want the 6:30 to be our manipulation, because that's my rules. And if I don't follow my rules long term, same with you guys, if you don't follow your rules long term, you're going to have an issue. Because there will be that one day that you broke the freaking rules and then you blow your account. And then you start to doubt yourself when losses don't change the dynamics of the market. You know, if we lose, we think everything has changed and all this other nonsense. But we just got taken out. It's not going to change the way that the market delivers because we took a loss. It's not going to make the models that we study and have seen play out and be effective. Doesn't mean that stuff's changed now because you took a loss. Just it doesn't work that way. We think it does in the moment, but it doesn't work that way. You could see here this delivery. Let's see if that offered minimums. I think it did from that fair value gap. Close to 20 points so far. All right. I believe that just delivered the minimums there. So yeah, it's got close. Right, 20 to 30 points. Right? So everything we've talked about so far has, at least for the most part, up until this point, has come to fruition. Things are still playing out. And, it's beautiful to see. So yeah, I hope all this stuff that we've been talking about makes sense. I'm assuming that a lot of you guys that are on right now have been with me for a while. So hopefully a lot of this stuff is like sounding repetitive. How do you handle your expectations when trading? Well, it goes back to what I said earlier. If I win a trade today, it's not going to have a huge impact on my life. If I lose a trade, depending on whether I follow my rules, it's going to seriously impact my mindset. So, and of course, trading isn't an overnight success. It takes years to be an overnight success in pretty much everything, and trading is no different. Unless you have $1 million or $100,000 to trade with right now, and you know that you can trust yourself, one trade's not going to change your life. So the expectation for the next trade to have some dramatic impact on our life, even if you're looking for a funded account, you shouldn't be aiming for one-hit wonders, because then when you get the funded account, that one-hit wonder is not going to come around. You're going to blow the account, and then it's just going to set you back. So the expectation in trading a lot of times is set incorrectly by these dumbasses on social media who don't allow people to see the reality because they want to sell you something. And then it messes you up, because then when you're in a trade or when you win a small win that's within your rules, you won't be satisfied and you won't celebrate that. But if you take a loss, you're going to be beating yourself up. So we got to keep these things in mind and understand that, this is going to take a while. It's not realistic at all for us to think that early on, a year, 2 years, sometimes even 3 years, that, that's going to change your life. It's just not. The better you become at trading, the more opportunity you'll have. And then that'll eventually end up, if you do things properly and focus on the right things, eventually it'll change your life. And a lot of students are like 20 and 18 and 21 and 24, and they have these insane expectations because they see so-and-so, who's a 20-year-old too, on social media buying Lambos. Like, that person doesn't make that off of trading. Like, it's just not, that's not happening. It's just not. Like, period. Most of the time, those same people that are flaunting this lifestyle, they didn't get it from trading, right? If you look at a lot of the people that are actually doing well, like Jade Cap, for example, do you see him posting Lambos? I mean, he has some lifestyle stuff, but he's an actual trader. He makes good money trading, and he proves it. But if they don't prove it, and they have these Lambos, more often than not, 99% of the time, they're selling something. So you can't compare your trading journey and the profits you make off of day trading or whatever style trading you're doing with someone selling a course or selling something. They're two different worlds, So again, you want to have the expectation overall, right? So when students come to me in my private community, the first thing I talk about, and even in the free community, I've showed the list, right, of important things. The first thing that's on the list is mindset and expectations. Because if that doesn't get dealt with early, if your expectations are incorrect, right, if they're way too lavish at the start, it's good to have long-term goals, but they should stay that. They should be the long-term goals. If you don't set those correctly, you're not going to be able to enjoy the small wins that you get, which you should celebrate. But then, if expectations are incorrect also and too lavish early on, you're going to take every loss as a detrimental, life-altering event, which is totally unrealistic. Your performance at the end of the week or after a set of trades should be the view. You shouldn't be thinking about the next trade. I don't care if the next trade's profitable, because over time, week to week, month to month, it's going to be a good result. And if it's not, it's okay. It's just 1 month, 1 week, 1 day. So again, it's not going to change anything with one trade. It's just not, or a week, or even 1 month, unless we're over trading and over leveraging, breaking the rules, right? Then you take that back to, long term, breaking the rules and stuff. It's not going to get you to where you want to go, so you got to reason with these different things that I've just mentioned and set your expectations properly, and look at the realistic view of things. Not many people talk about this from this perspective because this doesn't sell stuff. Right? A lot of times when I talk about this stuff, there's people that leave. Like I just saw right now, someone left because they don't want to hear this, right? It's the reality. I'm not here to satisfy someone's false expectations. It's not my objective. I could care less. If people have crazy expectations and they're coming here to get sold a dream that's not real, it's the wrong place for you to be at. The last 5-6 years has shown me a lot, and it showed me that the way that I entered trading was totally incorrect. Thinking about all this crazy stuff that wasn't realistic for a young aspiring trader to think about. It was not realistic. That put me in a horrible place mentally when I was getting my ass whooped, which all of us end up having at some point or another, right? So these are the realities. So when it comes to expectations, you have to be reasonable. You wouldn't expect a 1-year computer scientist to go out and create Apple, the company, in 1 month after they graduated. So why is the thought process different for us as traders? It's not. It shouldn't be. It should be, okay, I'm getting started with this insanely complicated, hard skill set that has a huge upside, but it's going to take time because there's a lot that goes into it. So my expectation should be I'm going to celebrate my small wins. I'm going to follow the rules so losses don't hurt me that much and I can still be here. And I'm going to just, progress reasonably quick, do what I got to do, make sure I'm building good habits, make sure I'm listening to people that know what the hell they're talking about. And I'm not going to beat myself up because this is hard. It's the hardest way to make easy money, this industry. Rich billionaires and scientists and people that have a ton of degrees and all that, these doctors and lawyers and all these people that are supposedly geniuses in the eyes of the world, most of them come in and they fail because they have egos and they don't understand how difficult this is going to be for them. Even the best, the brightest, the smartest people in the world fail at trading. And a lot of it has to do with expectations. Most people quit because of too lavish expectations. All right? So, because if you come in with Lambo lifestyle goals and you learn fairly quickly that it's not going to happen tomorrow, a lot of people are impatient and they have TikTok brain. So if it doesn't happen right now, I'm not going to spend time doing it because 5 years seems too long. When 5 years, you'll blink your eyes and 5 years will pass. You'll look back and think, damn, I wish I would have done this and focused on this, because you'll see other people that you watched succeeding. I started this with tons of people. There was so many people I started trading with, and 99% of them have quit. There's maybe 3 people that still trade that I used to trade with that started with me out of like 50 plus. and most of them quit. Some of them are reaching out to me a couple of days ago saying, oh, can you teach me? I'm like, no, that ship has sailed. I don't got time to sit here and backtrack, unless, you're going to make it worth my time, because it's, or watch live calls, right? It takes a special person to do this, and I've met a lot of special people, and that includes you guys. If you sit here listening to this stuff and find value in it, and you take losses and it doesn't make you think I want to quit, this is for you, and it will forever be for you. All right, so yeah, I hope that was insightful for you. Ski. Expectations is a topic that is insane, right? It's something I focus on a lot because it's one of the main reasons why people fail. It's the main reason why people overtrade, main reason why they over leverage, because their expectation is this over here and they're trying to get over here quicker, when the expectation should be, okay, I'm going to slowly grind my way to that goal, knowing that there's light at the end of the tunnel if I just stick to it, follow what I'm supposed to follow, do what I'm supposed to do, and become the person I have to become to receive those rewards. How did you reward yourself at the beginning after following your plan? Positive self-talk, taking whatever money I had and putting it into somewhere it can grow, buying assets. I didn't go out and spend, I still don't spend a lot of money, right? I stay below my means because I want to get rich. I don't want to be rich in things. I don't have an ego to stroke. I don't care if people like my car. I don't care if people like the place I live. I don't care if they like the clothes I wear. I don't care. That's not going to pay my bills and make me happy or provide for my family. So the celebration comes from positive self-talk. Part of the celebration too is helping others. I get enjoyment from helping those that want to listen. And seeing them thrive and succeed makes me feel like I'm doing something worthwhile in this world. Giving back some of the blessings that I've been able to achieve. Of course, by the grace of God, of course. Without Him, I wouldn't have been able to stick through the stuff I've been through and still go through, right? But part of the reward too is thanking God. A lot of the things that money can't buy. Spend a lot of time on those things. If to me, that's a reward. But yeah. So yeah, we're seeing the open take place. We've got this box that you see formed here. That's a regular trading hours gap. It's fairly large. It's over 100 plus points. So we'll see what happens here. This looks like it's going to continue to tank. DXY is kind of a mess. Here, let me pull up DXY on its own. I'd like to see DXY continue to show interest to the buy side. That supports the downside move. There's the equal lows that's been left. So it's kind of suspect. I'm going to identify what the 650 macro is going to provide to me. And then if I can't get anything there, the next opportunity, excuse me, the next opportunity that I'll look for time-wise will be around the macro after that. So 650 to 710, 20 minutes or so. And then if I can't find something within that, I'll find it in the next hour, the next macro. Right? But yeah, so far, everything that we've talked about, the targets, the scenario, the downside movement, the observations as far as why I feel that's going to be the case, all of that has kicked into motion. It's all playing out here. So I missed this opportunity because it's outside the macro. I missed this opportunity because it was before the open. And then I'm missing this opportunity because I don't take trades right at the open. So rules hurt sometimes. Okay, doesn't mean I couldn't have thrown something in and broke my rules. I do that from time to time. Right now, obviously, would have been a decent time to have done that. But it is what it is, Long term, I know through the pain of discipline, it will provide me something useful, a profitable experience. This solidifies my confidence. Like, we called this to go lower. Everything that we've asked for has happened. Again, right? From the start of the week up until this point. So that is amazing. So the next time when we look to get into an entry, or when the macro comes in, I have a lot of evidence behind me that I can trust. I know that I'm correct for now. So I have no problem looking for my model again. In this case, I'm going to look for the YouTube model, right? Maybe you look for some type of high to form, have it do some close scenario to this, right? This was the YouTube model here. Continuation variation. Here's a conservative entry, right? Waiting for the opportunity to take place, watching for the next fair value gap, trusting that it was going to go lower. So this could have been another opportunity to take. Again, outside of a macro, way too close to the 630 open. So yeah, I'll just wait for everything to take place again. I don't like that now we're reaching to my max target I had for the day, like so quickly. Obviously, that's not generally what you want to see, right? You want to see your model perform within your rules so you can participate and be part of it. And if it goes too far, obviously there's a risk of price retracing. But yeah, so far everything analysis-wise has perfectly played out, right? It's beautifully played out, right? It did offer this, but again, my rules are my rules. Doesn't mean you should have not taken the trade, right? You need to be your own independent thinker. I just provide my perspective, and you do what you will with the information, right? My goal is not to get you into trades. It's not my job, okay? It's your job, because if you take only my trades, then I'm the one responsible for that, and I don't want to be responsible for your actions, because I'm not always right. And I'm not a financial advisor, and it's illegal for me to do so. I know a lot of people do it, but entry is the least important. Understanding how I came to that assumption to find that entry, that lets you walk on your own 2 feet. So that if the world was to fall apart, you're not depending on one person. You're depending on yourself. In this market, there's no teams. All right? There's no teams. This isn't a team sport. You can have a group of people that are helpful to one another, which I have and I'm grateful for. But you want to be able to carry your own weight. And you want to be able to say at the end of the day that you're responsible for your success. You don't want someone else to be responsible for your success, because they can't pay your bills. They can't deal with the downside we have to go through and get you out of it. They can be supportive, but for the most part, we're responsible for all of it. So yeah, I'm gonna think about observing how this is going to behave. If we are going to continue to see the downside favored, as we have been witnessing real time, I'd like to see this turn around too to support the downside. I'd like to see the bonds stop with this wick nonsense. Doesn't seem like that's going to be the case. It seems like they're going to wait and hold off for tomorrow. So yeah, the bonds and yields are very unhelpful today. Overall, it's just they are helpful in the sense that it's showing us that the risk profile is higher. We have the DXY not really doing much. It's kind of stuck in a range. But we do see the downtrend continuing in the indices. So everything is definitely delivering pretty nicely. As far as what we're observing here, if we go back to that 10-minute time frame, zoom out real quick. Where was the breaker? So yeah, this candle here was our breaker. It's our 1 hour breaker here. So I want to see if price can give us, hopefully it could leave these lows and maybe give us a return back into the low here in this 1 hour breaker, because that's what I'm going to classify this as. And if price can get back up into there, that's where I would like to see some type of behavior related to my model take place. We can also now start to frame out this inversion fair value gap here. This may reject the need for price to go up there. Seems like it's going to blow it out. I would have definitely preferred to see some type of small retracement in there off the context of the bearish breaker. But overall, right, what we see happening here, it's wonderful because now going into tomorrow, going into Thursday, we have a very strong indication that we are still going to tank. So we have no reason to think if there's like a rally of some kind that we're going to put our interest behind, price being bullish. We don't have any evidence of that. We have full-on evidence behind us now that price is going to tank, right? We talked about it well before it took place. I would obviously like to see it pull back into a level that we can use to use as a rejection point. You can make the argument that there's also this here, right? You can see how the daily fair value gap has kept price below. If we go to the 5-minute, or let's actually go here. So let me kind of lighten this up a little bit. Pull some of this back a bit. So like I said, we're waiting for the macro here. I like DXY continuing to rally. This here is beautiful, right? You could see now that we've set equal lows now, and we also still have some of the fair value gap available. I'd prefer to see us run up above this high, use it as a short-term liquidity pool, and see price take that, then present us with the YouTube model in some capacity for me to want to get back and engage or something like this. Somewhere in here, maybe use this as one of the rejection areas, pull back against everybody that's coming into the market trying to buy or trying to sell. I'd prefer to see this take place, right? There is obviously a high risk opinion you can have by using this order block down here, thinking, okay, well, this should be able to hold price. We're close. Maybe it doesn't want to retrace and get back up above that, and it just wants to blow out the lows. I'd prefer to leave it like this, see us run out the highs here for short-term minor side buy side, and then maybe we could see price do some type of YouTube model delivery up here, resetting the rules. And then, of course, if price was to violate this and then just start rampaging back to the buy side, taking out all these levels, right, we may see this stuff end up becoming of interest. I'm not going to assume that, though, right? We always got to have a secondary backup plan, okay? And it's there just in case, right? But it's just that. It's just in case. It's not something that you focus on too heavily until it's proven. At this moment, downside is being proven. Right, we'll see if that wants to change. Right, it could, but I'm going to assume that we're going to continue to favor downside delivery. So as a result, going into the 650 macro, which we're coming close into, I'd like to see us run out the buy side here, and then leave some type of opportunity to engage, targeting the lows. So yeah. Didn't want to offer it before it blew out the lows here. So now we've taken out the lows here. Didn't even offer it on the 15-second, unfortunately. So yeah. So yeah, we were ahead of the downtrend. We were ahead of this delivery going lower. We painted the narrative early on. And everything that we talked about from Sunday up until right now is delivering as perfectly as it possibly could, right? So everything that we've done, getting us to this point, those are very important elements in the thought process as far as what put us in position to aim for this to unfold. It's a repeatable process. That's the thing. I would have obviously liked to have seen this run up above here, then provided us some evidence for a model to enter, but it just didn't want to do so. It's just delivered quickly. Again, I said that there was a high risk entry you could have thought about taking, I personally didn't want to take it because of the risk of it coming back and at least getting into like this 1 hour breaker I was identifying. But you could see it has a serious interest to want to continue to fall because, again, we are in a downside delivery supported by COT, supported by just the overall delivery we've been seeing, plus geopolitical chaos. And the target I aimed for early on, right when we got on the call, it's been fulfilled, both of them. You know, we aimed for the low here when we were up here, delivered. Intermediate term highs I wanted to see hold in price to validate that this was going to stay bearish. All of it held. The fair value gap down here that I identified early on as a potential daily target, price ended up attacking it and hitting it flawlessly in low resistance fashion. Right? It's beautiful. Did exactly what daddy told it to do. Right? Like ICT says, right? But yeah. So I hope everything's made sense. If you got any questions, let me know, as always. But yeah, we'll look to see if our model or models in some capacity can form going into this macro here. It's been very aggressive. So again, I wouldn't be surprised if there's some kind of retracement that takes place. And I would really like to see it run out the highs up here. I don't think that that's as likely as it could have been if it didn't blow this low out first, right? In terms of the likelihood of it retracing, I don't know how likely it would be to get up into this fair value gap again. I don't think that's very likely at all, if I'm being honest. Let me clean this up a little bit. So we do see some type of declining taking place in the DXY. But again, DXY is kind of just stuck. You know, it's in my opinion, it's waiting. It's definitely waiting for what takes place tomorrow. But yeah. We'll continue to watch price going lower here. Again, I would have preferred to see price use this level as a bearish breaker. And then, of course, I would have liked to maybe get a return into this inversion fair value gap. Obviously, it didn't do that, right? It did use this also as an inversion. Aside from the breaker here, it used this fair value gap here. It left those intermediate term highs. So, you know, a lot of those things thankfully have stayed intact. But again, we have rules for a reason. We don't just shoot at anything and everything because we think price is going to do this or that. We need a logical reason that lines up with our model. Maybe this acts as a resistance level here. I don't like how DXY is declining up in this level. Let's see what happens here if we can see some type of model form for the YouTube model in line with the downside delivery. We've really blown out a lot of the significant levels I wanted to see. What do we have left? We have this low, and then of course this low. And we could take from this high to that low and get an extension level. So this is going to mix in a little bit of targeting principles, because this was the area that presented us with that drop. Right, so this high to that low, it was also a bearish breaker. Take the high of it to the low of it. Once it violates it, we can then put a fib, and we could see the fib extension, 1.5 standard deviations, is pretty nice here. But then we also have the half standard deviation. So the very first extension level, we're almost there. I'm assuming that we could potentially get down to that level. So we got this level as a potential target. If it gets more excited, which I don't think it's going to deliver another 1,000 plus point range, or even 500. Have we even got close to that so far? From overnight tonight? Yeah, we got close. Yeah, we're back inside this fair value gap here. Let's see, can we go find... This is a pretty reasonable fair value gap. So that may be what it uses. Instead of coming all the way up into here, it's already also blown out this area. So yeah, that could potentially continue to hold. Again, I'd like to see, if we go to the seconds chart, where is the YouTube model? Because it's so overly extended, risk gets cut, right? When you enter continuation moves, if you started with one particular level of risk, like say 1%, if you do see a logical area that's going to still blow out, or you think there's an interest to do so, you cut your risk again. You know, it's a constant adjustment when it comes to risk. You know, not every single opportunity should be your full risk exposure. You know, there's times where you have to adjust. Like if price is taken off and you've missed a couple of moves, like today we've missed a couple of moves that just were outside of the rules. You got to make sure that you are conscious of that and don't do anything stupid, right? So if this does choose to hold, there is a risk of it wanting to come back and retrace and, you know, maybe stop some of these guys out, then giving us another leg. But if this holds here, right, we got to think, run on stops in a PD array, inversion fair value gap, shift in market structure, and we have a target down here, right? So we may be able to see that offer some type of move for us. So let's see if this fair value gap here can hold in price. See if that can offer an opportunity. Then maybe we can continue to decline. Again, there is a risk of price giving some type of retracement. This right here, if it does blow out the lows, is a beautiful example of the continuation variation inside of a price leg, moving towards a specific direction. So yeah, let's see if it can continue to break down below that. Again, because it's so extended here, there's a risk of it wanting to come and maybe blow these people out too. Right? So yeah, let's see if that will continue to hold. Again, I wish it wouldn't have been so quick to get down below these areas. I wish it would have held a little longer and then just danced around a little bit more versus just melting off the face of the earth. But hey, that's the environment we are trading within. Chaos, right? It's so quick. So yeah. I mean, this entry here, right, if you would have entered inside that, I mean, it offered the minimums, 20 to 30 points. Just that little piece, right? You can see the YouTube model presented itself. And that little portion right there that you see, that's all you need. A couple times a week, 20 to 30 points. You know, you don't need to demand so much. Going back to expectations, right? Yeah, were these lows here? Okay, that's an extension. Oh, spelled that shit wrong. Whoops. sell side here. All right, so yeah. I would definitely like to see this deliver here because it'll be an amazing example of the continuation variations I talk about. It's a huge element to stopping you from thinking, oh, I'm not going to be able to have a setup, you know, or if I miss a move, it's the end of the world. It's not. You know, things are taking place constantly, over and over and over. You know, once it hits that 50% or that half standard deviation level, I would expect it's more likely to want to retrace. I mean, there's a pretty strong likelihood that it could retrace already. So again, it's a very high risk area in here to be taking a trade. But again, it offered the minimums, and there's a reasonable expectation for us to maybe get down into this level, then potentially look to retrace. Again, I wish that it wouldn't have blown out these lows down here so quickly, you know, but we're inside this macro here. So let's see if this can offer the macro delivery. I think it already did up here. It offered, yeah, 650 macro, delivered that. But again, did that offer your model? If it didn't, it did offer it here. But if you weren't aiming for, you know, 20 or 30 points, you may be stressing out, right? Once it blows this out, I would be pretty much done. And maybe if it hits and blasts through it, maybe I would hold a little bit, but it wouldn't really, it'd be no need, you know. 20 to 30 points is all you need. So yeah, anything above that is like whipped cream on a cake. Right? Just like I mentioned, trade of 8, top step. $50 points. Given before the fact. Reason why. Risk protocol, right? The level of risk, how it's a strong risk exposure, higher risk. But yeah, all this took place ahead of what we did, right? All of this took place. We remained calm. We didn't care how it was delivering because guess what? We know something's going to come. And you know what else? The things that I talk about in terms of continuation model, continuation variation, what we just saw here and what we continuously see, for those of you that are paying attention, which most of you guys are, you know, pretty much all you guys that are on here, as far as I'm aware, like Ski, like Tony, like Jonesy is in my private community. It's Niao. Yeah, for the most part, there's also Nutty Fafa that hops on. Most of you guys that regularly hop on here, you see how insane this stuff is. And if you pay attention, to steal ICT's lingo again, gold is being given to you. Okay, obviously there's deeper levels that we can go on many things, which, you know, my private community definitely gets a lot of. But even just things on the surface here, with the stuff I provide on YouTube, it's absolutely life-changing. It's perspective shifting. It's confidence building, trust building. Separates us from everybody, you know. And I don't have a massive following, but I don't care if it ever gets massive, you know. If I could have 7 people, or even 1 person here on a regular basis, and I could see those people start to succeed, which I've been seeing, which I'm extremely grateful to, you know, play a small role in, it makes this all worth it, you know. I know what this provides. All right, I don't have to show the amount of money I make every day. I show it from time to time, but I don't want signal junkies on my channel. I don't want people that are not serious and just want to have me to put them in trades. That's not fulfilling to me. I could easily make a course, sell the course, market the course, show all the evidence of thousands of dollars that are made continuously, and I can blow this channel up. But that's gonna bring people that I don't want to be here. It'll invite them to come. And I want everybody to take a look at the stuff we do, because it becomes very apparent that this stuff is extremely accurate. It's extremely consistent. I can do it. I do it regularly, whether it's here or every week continuously in front of my private community students. So the proof is in the pudding, and you don't have to see bank accounts, okay, to have evidence of that. Just watch the market, see if it goes and does what we ask or what we say it's going to do. When I say, this could be a potential opportunity, study it. Does it play out or not? And you can put 2 and 2 together. Those that are serious, same with with ICT stuff. Those that spend time actually wanting to learn, that actually want to be around and do investigating and figure it out. You could see very quickly what's happening. You could see the validity, and it's amazing. Since Ski Mark said, since I started watching you, I have slowly been able to follow my plan, even though it's not all the time, but most times. And I think, God bless you too, brother. Seriously, you guys have anywhere else you could be in the world of the internet. All these people that sell the dreams and do better marketing and maybe even they have more aesthetically pleasing content or whatever the case may be. But you choose to be here on this small channel with someone like me. It's a godsend for you guys to give me your attention. Because you're not being forced to listen. And I don't do anything like most of these influencers do. I don't rent Lambos and try to sell my lifestyle and all this other crap, because I don't personally live like that anyways. I choose not to live that way. I want to be rich in assets, and I want to make sure that I can help people along the way, because I love this industry and I love the people in it that want to be successful. Because I remember when I didn't have anyone to turn to, when nobody would understand. I mean, to this very day, most people don't get what I do. They don't understand, But I remember when I had no one to talk to. I remember when I was struggling, going through a horrible situation with my child's mother, which carries on to today. And I, had no one to turn to. Everything was on fire in my life. I remember, so for me to be on and have any attention at all, it's a blessing for me too. Just as much as you guys think it's a blessing for me to share some of this stuff, and you see the validity, it's also a blessing. It means a lot to me that you guys spend your time here with me when you have everywhere else to go. You have all these other people you could pay attention to that are literally fighting for your attention just to sell you a bunch of lies and talk about crap that they can't even do. So Ski Mark, God bless you too. And God bless each and every one of you guys that show up here on a regular basis. Even my private community students too. Like, man, they've been doing amazing. And I'm glad to see that the YouTube content that I give, right? Because I provide as much value as I can that doesn't take away from their experience. But I'm glad that the things that I'm able to share here also are helping many of you guys. And it's going to stay that way. Whether you have the means to want to, or the means or interest in joining me in a more private, more intimate setting, or if, the only option you have is to hop on these calls. Either direction, I want to make sure that you're all getting the help that you need, that you're coming and looking for, coming around to look and look for, blessed to have found you in your education. Appreciate you, Tony. Right, you're one of them that seriously has been applying pressure with this stuff. I just stick with your plan and come back. It will all play out. Yeah. sticking to your plan. And that's the thing. Something that I do that most people don't do. Like, I make sure that this is a fact when it comes to my content and my presence online. I do everything that I want to do, that I want the student to do. So if I say follow your rules, this is what needs to be done, you're going to see me doing that same thing. You're not going to see me say don't overtrade and then I'm overtrading. Sometimes I will go outside of the 2 trades and allow myself to have a 3rd trade. Right? Sometimes I add on to winning positions. So it looks like there's even more trades, but it's one trade idea with multiple layers, multiple added entries on top of. When I say stuff, I do it. And I've noticed that over the last 5-6 years, that helps people believe in themselves to do the same thing. They look and see, oh, this guy's following his rules. He's not over trading and over leveraging. He's doing well. He's able to get in line and things are, working out. So why can't I? And then you take that thought process and you go do it yourself, and then you see things become less stressful. It becomes more organized. You become better as a trader. Things are just more enjoyable. And then at the end of the day, you become more effective. Again, that's the goal. The goal is to get each and every one of you guys to have the ability to get to your goals based on your own efforts. Not because I called out a trade and you took the trade and got a funded account because of that. I don't like that. That's not enjoyable for me to think about. And then every time I take a trade, I'm going to be thinking, oh God, someone's going to take a trade, and if I take a loss, it's going to hurt them. And that's why I don't have signals, But I break down my thought process. So if I do call something that I feel could work, you understand the reason why behind my decision. And then if you do enter, you also see the way that I target. You see the way that I do things. So then it's easier for you to follow things on your own and do it on your own. But then it also makes this process more meaningful when you sit and watch on the live calls. So yeah. See, it's been a pretty eventful morning. It's been a pretty awesome week so far. Everything has delivered the way that we wanted it to. Targets have been met, right? Every single target I called for this morning has been completely met in stunning fashion, right? And then the moves that could have been participated in, which were clearly there, although they were missed because we follow our rules, we were able to then find our rules kicking back in alignment, supporting the overall idea as a whole, in which case is favoring price going lower. But then we reset our rules. We utilize the continuation variation concept with specifically the YouTube model. And we were able to find an opportunity to participate in that yielded us 20 to 30 points. No overtrading necessary, no guilt necessary for missing these upper moves that, yes, they delivered bigger. But again, what is your goal? If you're looking for massive runs every day or every time you take a trade, you're going to have to obviously frame them from the higher time frame and accept that they aren't going to happen all the time. But 20 to 30 points, yeah, that happens on a regular basis. And the way that we operated today is repeatable, right? We waited for the rules to kick back in alignment. We used levels that logically would have rejected price, like this fair value gap here. That was an inversion. Price respected it, right? Once it shifted below the low here, fair value gap was there, entry was taken, stop was above the fair value gap, targeted the 0.5 extension level from what I showed earlier, and price hit it. I said that's the target where I would close the position. That's where I closed the position. And look at the response. You see why, right? I said this is probably a level, if it hits it, that'll be a time of potential retracement. Look what it did. Did exactly that. So So yeah, there's a rhyme and reason to everything. But yeah, so those of you that have been here throughout the whole morning, has there been anything that we've talked about that stands out to you that was helpful? Or maybe there's something that didn't make sense and how we arrived at the assumption that price is going to go lower? Just let me know in the chat. Again, I appreciate you guys sticking with me this long. I know these calls are sometimes really long, but I fill them with as much reasonable value as I can. So, hopefully it doesn't feel like a fire hose. Yeah, even if it does somewhat feel like that sometimes, just stick around and eventually it will stick. But yeah, let me know in the comments or the chat if there's anything. Ski Mark said, long but full of gems. Yep. That's what I try to make it be, right? All right, so we see that we have given this small retracement here. It's came back into logical levels. Let's see what is taking place here. We got this order block. We could see it slightly peaked above this high. It's now broken down below this low. So let's see if... So I don't like the fact there's this S&T here from this low to this low. So yeah, I don't really like that for me to build trust for price to continue to go lower. That makes me feel like, there's a pretty strong likelihood that we could retrace. You could still somewhat make the argument we're outside of the macro, so automatically things are not interesting. We do have a 5 minute before, 5 minute after the macros either start or end. It's a reasonable leeway you can give yourself, which for the most part generally plays out. So that could be coming into play here. But of course, 15-second chart's the only chart for this opportunity that basically shows this opportunity. This is the highest risk aside from all these other ones. This one was already high risk. This is even more high risk to try to take a short because we've already delivered over 300 points, and the likelihood of price wanting to come back, stop these people out first, then maybe in the PM session deliver continued downside. I think that's more interesting, right? It's more likely. Not obviously 100%. Nothing's 100%. I mean, this could still just use this and continue to go lower. But as far as today, the overall analysis, we have hit so many levels that we have identified overall. There comes a time in the price delivery where you just gotta accept that, okay, there's been a lot of work that's already been done. So there's no reason to push or try to demand anything. If anything, you'd have to wait for a macro to take place again. Overall, the 750 or 650 to 710 macro delivered this down movement, fulfilling the extension, right? And it could be a reasonable argument that this again could lead to price dropping. I think it's more likely that this could stall out here, at least for a little bit, maybe come back up and take these stops out. Because think about it, anyone that's in the trade here, right, they're probably, for the most part, in profit. So the stops are above here. That's not to say that this won't deliver down, but there's a higher likelihood that if a retracement is going to take place, it could very well take place in here, but that doesn't upset the down movement, So that becomes the issue when you see price deliver so aggressively like this, especially if it's before the open. It delivered before the open earlier. So what was in my mind was the risk of price wanting to come back, right? I saw this take place and I was like, all right, let's just try to throw something behind that. And risk was tiny, right? It was extremely small from this fair value gap to the high of the fair value gap. Right, so it was 20 points. And then I targeted the fib down here, the extension level. So that move was reasonable, right? Now you can start to make the argument that, this entry here at this fair value gap, coupled with this order block as well. I mean, let's see, you would have had to enter perfectly at the high, all right, and have taken it down to that low and perfectly taken profits off, which obviously will never happen. Can't be perfect, so it'll be a little bit off. But nonetheless, even this offered 20 points. High risk. Stop would have had to go above this high, right? But nonetheless, what you need to really drill down on and burn into your understanding is something this small, this tiny piece of price delivery is all you need to be able to capture on a regular basis if you're trading the Nasdaq, obviously. Right, so 20 to 30 points in the Nasdaq, 5 to 10 points in the S&P. That's it. This small, tiny, minuscule amount. That's all you need. Do it 2-3 times a week. And over time, as your accounts get bigger, right, as you invest more in your skill set, maybe you end up passing funded accounts, right? Once you get the funded accounts, maybe you were going a little hard, being more risky than you should have, and you were able to get the funded account. However, whatever way you get the funded account, once you get the funded account, this is what your aim should be. Okay? 1 to 2 trades a day. You're not going to get rich off one trade like we talked about earlier with expectations. But this is part of the expectation you should think about having when you do get the funded accounts. And then slowly grow your way out of whatever situation you're trying to get out of. You know what I mean? Like if you're trying to quit a job, if you're trying to supplement a job, if you're trying to use trading for whatever reason, you want to slowly get there. And the only way you get there, for sure, or nothing's for sure, obviously, but for you to have the best chance to get to the goals you're trying to get to and keep it consistent, you got to have a consistent process. You got to make risk your number one priority, not making profits. Risk and trading well and being organized and disciplined. Those are your main focuses. Because without one of those things, everything collapses. Everything becomes impossible. If you don't have risk control down, you're going to blow your account all the time. So goals aren't going to be possible, right? If your mindset and expectations are insane and way too much, you're not going to be satisfied with the small wins, the small gains. And you're going to get beat up horribly by the downside because, if your risk control is out of whack, it's going to be a problem. The downside is going to be much bigger than the upside, like mental impact wise. Right? And then, of course, if your technicals are off, how are you going to find an opportunity? So you got to be strong with the technicals. And if you want consistent results, you need to have a consistent process. Without a consistent process, consistent results don't take place. I used an analogy the other day that pretty much talks about when someone goes to work, they're not doing just random crap all day. They're doing one specific thing that they are required to do to get their paycheck. And it's the same thing every day. It's a system. So what makes trading any different? It's a business. You want consistent results, you got to do consistent things. It has to be a consistent process. So yeah, now at this point, right, this little more high risk opportunity ended up delivering a little bit more than the minimum. It's another 50-point move right here. Of course, it's higher risk because we're way delivered. We hit an extension level. There's a risk of price maybe wanting to retrace, getting up maybe into this area here. With price going higher here, dropping so aggressively, I would assume that because buy side was delivered so beautifully and there was this huge impulse, it shouldn't have to fill in the rest of this. This should be able to, let's assume that is a wick, yeah. So you see this large wick here, I talked about this the other day. this large wick here going into this fair value gap, in reality, there's really only a tiny piece of that gap that is imbalanced. Right? It's this small piece. Right? So because this large wick went through this fair value gap, if we return back into that fair value gap, it's not going to be expected or demanded that it fills the entire fair value gap if it was to come back up into that level. I'd simply like to see us maybe throw a wick above that, fill in the rest. It could trade a little bit into it, but for the most part, the upper portion should be able to stay intact. If that happens, that's ideally what we want to see, because it supports price being extremely interested in going to the downside and not really wanting to have a deeper retracement. Now, if it was to blow past all of that, then obviously we have the high up here, and then maybe even, price can get all the way back up into this level, right? But we should still, if the week is going to remain bearish, we should still be able to continue to see price respect things like this, right? But we'll see. Right. So tomorrow it's going to be pretty dramatic, I feel like. Let me see. If they keep it the same, right? The interest rates, if they keep the rate the same like that, it shouldn't have too much of a crazy impact. Of course, we have that coupled with FOMC, and we have no news at all in the earlier moments of the AM session. So it may lead to a lethargic AM session tomorrow. This has been a pretty strong delivery. So if it continues, and maybe it delivers even further, more aggressively to end the day, and this ends up being a large range day. I think it's already become a large range day. Yeah, it's a huge candle. So this large range may, especially because tomorrow doesn't have any news early, the AM session may be a little difficult. And, the PM session will probably be when most of the fireworks take place. And then, of course, because that's the case, I won't be available to trade it because I am focused on the AM session. I have no interest in trading the PM session because, I grew into loving the AM session. Doesn't mean you can't trade it or shouldn't trade it. That's just my perspective and the way that I choose to run my business. But yeah, so let's kind of flip through what some of the other indices are doing. Again, we do see the S&P there at the low. If we look at some of this. So yeah, again, we have this S&T. That was something that I used from Sunday up until today to anticipate something that supported a retracement. We have this large wick here. You see that it could not violate that. And then as a result, we stayed also below this 8-hour fair value gap. Right, notice how I mentioned something about this wick. I mentioned this the other day too. I think it was in my private community though. Maybe it was on the. I think I mentioned it on Sunday too. But you can see how the midpoint of this fair value gap stayed respected. It did kind of trade through it a little bit, but for the most part, price ended up rejecting from that, and we're continuing to do so. So you can see that the 8-hour fair value gap is still being respected too. So there's lots of indication that we're going to still continue to go lower, right? Higher time frame wise, nothing's changed. We've just basically retraced on this daily chart, gave a retracement. Now we're pulling back into this bullish order block. Now we're kind of contesting the midpoint of that. The deeper it goes into that order block, the more likely it is for it to blow these lows out. And that's of interest to me because we're in a downtrend. Now, if it was to hit the midpoint of this order block and race higher and get above this swing high here, that becomes an issue, right? That would mean we have to start targeting potentially higher upside. Doesn't overall change things in the grand scheme of things. It does start to give us ideas that, maybe deeper areas will be targeted, like maybe this, right? This weekly fair value gap. And then for this weekly chart, if it was to violate that, like completely blow that out, then things may start to adjust from bearish to bullish. But again, that's a long way away. So because narrative doesn't change on the weekly chart dramatically on a regular basis, like the overall narrative doesn't change, there is retracement sometimes, bullish in a downtrend, and then vice versa, bearish retracements in a uptrend. Because it takes a while and a lot of things for the narrative to change overall, we're able to take the higher time frame narrative that we paint and drag that forward for a while, right? Sometimes for weeks on end. And then we can navigate counter trend ideas within the retracements that take place. And we're able to navigate in that way and still stay in line with the overall narrative without having to flip-flop over and over. And we can make sense of the retracements. Why is something retracing? Well, it's coming back to offer either a premium or discount, depending on what direction we're going. It's reaching for a PD array to set up the narrative again, the higher time frame narrative. Every turnaround in the market is not a break in market structure, right? And there's a difference between also breaks and shifts in market structure too. They're two different things, and they have two different scenarios that have to take place for one or the other to be present in the market, right? Like a shift in market structure could be something that goes back in line with the trend. Like, for example, right, price came up, ran this high, shifted back in line with the downtrend here, right? Then sometimes, price can break above. This isn't really much of a shift because it just wicked above it. But say there was an impulse above that with the fair value gap that forms of some kind. A shift can also shift in market instead of going from like stops or external range liquidity to internal range liquidity, being a fair value gap, an order block of some kind. If it takes stops to stops quickly, right? Like say it's one or two candles that take the stops, and then it violently breaks through on that higher time frame another level of stops, right? Like say this low was, say we were looking at the daily chart and it took out this low, then almost immediately breaks back above some form of stops like this. You classify that as stops to stops. That then could possibly be a break in market structure, right? I can get into a very deep lesson about that. I have some conversations in my private community, some lessons about that. There's obviously a lot that goes into it, so I'll save that for another day. But bottom line is there's a difference between breaks and shifts, and so unless something changes, we're going to continue to favor price going to the downside. We may be starting to see some evidence that it might want to run back up. We've definitely blown out a lot of decent liquidity pools so far. All my targets have been met for today. So again, I wouldn't be really surprised if they do look to want to have interest to maybe start to seek some buy side up here. That doesn't change anything. That could set us up for PM session to continue with this bearish power 3 that's been taking place. Again, we still do want to consider the SMT at the lows here. Right, there's SMT from this low and that low. So yeah. Just looking at price, I really do wish that it would have given us something more workable up here, because I mean we would have been able to get involved with that. Of course, that would have been massive, right? But we come into the market looking for minimums because that's easily attainable, and very strong steps forward to consistency for anybody. So yeah, this is what we see here for the 1 hour. We got did I mark that? I think I did. See, let's actually mark this from the 1 hour. See how price wants to behave around this. This may set up another leg lower from this inversion fair value gap. Something to consider here too, right? So because price took buy side here, then price took sell side here, aggressively pushed away from it, we should not see price want to come back to the midpoint of this. It should not even really get close to the midpoint of this breaker here. That's what this is. This is a 1 hour bearish breaker, right? I mean, you could really make the argument that, this run on stops here, price shifted market structure down in here. And on this 1 hour chart, this ended up being the YouTube model, right up in this level here. Because again, we see the run on stops element. We see the swing low, a shift element. Then we see within this breaker delivery, we see a potential YouTube model in line with the trend going lower, right? So you could see models overlap with one another a lot of times, right? So there's inside of this breaker delivery, right? That being the low high down to the lower low. Within that earlier delivery, before it breaks this low and sets up the breaker, we can see that the YouTube model is also overlapped with this potential breaker idea. Yes, we're on the 1 hour, but you take this logic and understanding I just mentioned, you can take it to the 1 minute, 5 minute, 15 minute, and you can see this taking place. You could take it on the daily, right? This stuff happens on the daily chart too. But it just shows most of the entry models can overlap. Like I use market maker models, breakers, the YouTube model, institutional order flow entry drill. All of those things can be present in one price leg. They can all overlap in some capacity across the different time frames. And I spent months, pretty much 8-9 months on each of those models, trying to perfect the rules and best scenarios and high probability, low probability. So for the most part, every single opportunity I identify as a market maker model in it. And like I said, this consolidation, or this low down here, we see price moving up here, then we have that smart money reversal in here. So you drag that over, potential first stage distribution. If we can get price to come down into this level, I'm very, very much behind this quickly trying to race down below the lows here. Especially if we could still see DXY go higher. We're at a very reasonable level for reaction, which is this monthly fair value gap. So I am definitely interested in continuing to monitor how this is going to behave here. So yeah, got this 30-minute fair value gap in there. Let's see if it's going to continue to go lower, right? Let's see. It looks like it's still interested in really wanting to rampage lower. We're in a very, very low resistance delivery down here. Obviously, it went from low resistance, hit particular liquidity pools, and now it's kind of given a stall out scenario. As I mentioned earlier, if opportunities were missed, but we still believe prices in this case going to go lower, we have multiple macros, right? So we'll just wait for 750 macro, and we'll see if there's any extra opportunities we can identify and study going into that moment in time. Right, so yeah. And then of course, like I mentioned, right now we have this 30-minute fair value gap to watch. Because we have all these overlapping areas, I don't really believe it's going to have much interest to get a deep retracement. Obviously it could, because we've blown out some very significant levels. We did leave relative equal lows down here that are pretty obvious. There's juicy liquidity down there. But, you know, we'll see. We're at a moment where price is stalling out. So again, whenever you see price doing this, it just highlights the importance of the macros. Do you want to be stuck in this type of delivery? And if you do find yourself observing something in that type of delivery, how can you use time to get yourself positioned at a moment where you're not going to have to deal with, you know, price not moving much? The answer to that is identifying the macros. Take entries inside the macros. 5 minutes before, 5 minutes after. It's reasonable. But wait for those times. That also, if you deal with over trading and over leveraging, that also forces you to wait. You know, it doesn't mean you get into the macro and take 500 trades. You know, you're only going to have like 1 or 2 chances. You know, sometimes there's more. If you're on like the seconds chart, you saw that there was multiple entries we talked about today. But you don't want to look at it that way. You want one entry that gets you the minimums and you can get out. And then, you know, as you grow and get better and trust yourself more, you can increase the objectives. But you could just live in 20 to 30 points and be cool. You know, 20 to 30 points can get you, you know, $200, $300, $400. If you could do that a couple of times a week, that's more than most people are making. Like in general, especially in the United States. United States, the median income is like 40, 50,000, I think, something like that. That's like not even $200 a day after taxes, especially in a place like California, which is, you know, communist, right? It's a horrible state in the United States. But yeah. It's much more attainable to identify these smaller objectives, like paying off a bill or replacing a job, especially if you work for minimum wage. It's very encouraging to look to replace that first. Then, you know, you can have Lambo dreams later, but you got to cross one bridge to get to the other. So yeah, let's see what the response is going to be once price blows these out. Is it going to blow these levels out and then displace again, and then maybe offer the YouTube model again? Because again, we're in continuation variation viewpoint right now, trying to see if, you know, price can then get back in line with something to the downside. It's not unreasonable for them to want to retrace here. But the question is, are they going to retrace and then just completely drop? Because bearish power 3 delivery is still in play for the weekly range. So I don't have any crazy expectations that price is going to aggressively rampage higher, unless of course it gets up into these areas, right? And if it starts to do that, then you know, we can begin to adjust. But yeah, DXY, I'd prefer to see this continue to go higher. Obviously, the bonds and yields haven't been very helpful, but I'd prefer, if that's going to take place, I want the yields to rally too. And if the indices are going to drop, I'd like to continue to see this fall lower. Obviously, it's stuck, right? It's anticipating something coming tomorrow. And then, of course, if indices are going to drop, DXY is going to go higher. I would like to definitely see this violate this low. I talked about this order block here on the currencies on Sunday. And I said if it holds above that, it's probably going to blow the highs out. If not, if it violates that, we have the fair value gap down here to watch. And, whatever it does down there would determine the marching orders moving forward. But so far, it has been respecting this bullish daily order block. So what is taking place? Buy side delivery, right? But if the indices are going to fall and the bonds are going to fall, this will probably be at some point aiming for sell side. A very obvious equal lows here, equal lows here. There was SMT at the highs here. You may be wondering what these lines are, these little quadrants, and it is a weekly wick. Okay, the weekly wick level. Look at how beautiful that midpoint was respected. So we're gonna see moving forward, probably after the interest rate announcement tomorrow. That'll probably determine where this is going to go. Is it going to violate going higher, or is it going to decline? Because the interest rate announcement tomorrow is going to directly impact the bonds and yields, which will, directly impact the DXY. And whatever the DXY does, that'll translate to what this is going to be interested in doing. So again, the bonds and yields, people don't realize it's so important. It's a lot of the driving factors behind many things that are happening economically for the U.S. I think it's the same for every country. I believe it is. But again, that can get real complicated. We just got to know what impacts what. That's all we're looking to accomplish or understand. Same with the COT. It's all just to figure out what impacts what, and can I trust a particular thing to take place based on a particular piece of knowledge? Right. So yeah, I'm gonna assume that hopefully we could see price continue to go lower. We're still in the bearish power 3. Okay. We've taken out all levels. So all levels that I've called for. So the overall analysis has been beautifully delivered, right? Everything has worked perfect to script. And then we caught a continuation variation of the YouTube model, aiming for the fib extension down here, which just came to fruition. Now, we've gotten back above this high here. So again, we'll just continue to monitor the YouTube model right now, right? We have relative equal lows down here. The price could want to attack. Okay. So if it is going to continue dropping here, we now have a new scenario, right? Power 3 bearish is still in play. Hopefully we could see DXY continue to go higher. It's super extended already to the downside. We've delivered through a lot of liquidity pools. But if we are going to continue to drop here, right, let's observe this as a run on stops. Shift in market structure below this low. Now there's a fair value gap in here. Right? Maybe that will offer another potential move to target these relative equal lows that were left. Right up in there. And if it doesn't want to return back, then obviously the move is not going to be something worthwhile. And then if that was to be disrespected, right, we may see something like this maybe get attempted. But I'm I'm somewhat confident that this should still continue. But again, we've delivered so aggressively that it may stall out a bit till PM session. But we're going into this macro here, so maybe it has enough juice to get us from this area down to here. DXY is also still pretty strong to the buy side. So yeah, let's see what happens here. So if you already took a trade, you don't take another trade, right? You just take this as an opportunity to study. And if you choose to not take my advice, then, you know, it's on you, right? Whether you win or lose, it's all on you. So yeah, let's see if this fair value gap here, if DXY is going to continue to go higher. Let's see if this fair value gap can hold as an inversion, and let's see if this can potentially be the run-on stops, triggering people in to maybe look to target this once more. Again, because it's so overly delivered already, it's over 300 plus points today. Again, it's already a high-risk day because of the news tomorrow. And, you know, the simple fact that we've already delivered so aggressively, there is a risk of it wanting to come and attempt to blow these people out in a more meaningful fashion before smart money decides to send price lower. So yeah, let's see what happens here. If DXY continues to rally, that supports this idea. So I think this should be pretty decent. You know, we'll see if that wants to deliver from there. Ideally, it should. But we'll see. We will see now, won't we? So yeah, let's watch this 750 macro delivery. Let's see, is it going to provide more evidence showing yet again how effective the macros are? And how waiting for the macros is not making you miss anything. 30 points offered again. 30 plus points offered again inside the macro. Right? So even if you just took this, right, down to the lows, or just even down to this low here, it offered yet again the minimums. Simply off of the logic we've talked about this morning. So yeah, if price starts to violate, going back to the buy side, you know, there's a potential likelihood for us to attempt to blow this out ahead of the PM session. And then maybe the PM session would start to deliver again, or maybe we get stuck and things don't do anything at all. But this here, for me, would have been the last opportunity I would observe, I should say. So yeah, so we had something right here. We had multiple areas in here that we talked about. I showed that I engaged in this particular idea, was able to secure about 50 points. And we can show that again, right? A little bit beyond 50 points. Trade of 8, okay? Oh, no other opportunities are taken either. Do you see any other arrows? One trade, lead by example. So when it comes to macros, I got this question a lot the last couple of days too. Macros work in every asset for the most part, right? Definitely works in silver, definitely works in gold, definitely works in all the commodities, definitely works in Forex, definitely works in the indices. Not too sure 100% around crypto. I would hope that eventually things start to look very similar, so then everyone can start incorporating crypto as well. It still works for the most part. The kill zones are kind of off because it's a 24-hour market, but I don't see why it would be any different than like Forex. Forex is 24/7 too. So it's just kind of interesting. I'm not sure. I did a study on crypto and stuff like that. I was trying to trade those. You could see that there's disjointed feeling with it. Power 3 is still there. But yeah, I'm not sure if there's some things that are still a bit gray for me with crypto. But yeah, other than that, macros work for everything. They're available in every asset, except for sure with crypto. I'm not 100% sure. As far as what I've been able to see, it doesn't really line up as perfect as the futures markets. I don't know, maybe that changes, because they're going to eventually, I think they already have a futures market for Bitcoin and Ethereum and stuff like that. I think if I'm not mistaken, they do have something. I'm not sure about futures. I know they got ETFs and an index, but I'm not 100% sure. Hopefully they do at some point. And then hopefully it kicks back in alignment with all the stuff that we already see. For the most part, you see the signs there, signatures there that look very similar, but the timing elements are a bit off. But yeah, pretty much in everything other than crypto, you can be assured that macros are present. Because the timing element it's across the board. It just shows evidence that there's a macro and similar logic across all the markets. There's something driving the information that is, although things look a little different in the different assets, there's still key components that are very repetitive and similar, right? And in terms of the overall delivery and signatures and price, a lot of it's universal. So yeah, let's continue to watch this, right? So like I said, it did deliver the minimums there. Let's see if this level here can still hold. Because again, look, there's a run on stops here. If it is going to go lower, and this is a piece of the price leg that is going to deliver lower here, we have a run on stops, delivery back into this inversion for value gap. Price came down, offered one opportunity here as a delivery back into this potential inversion. Now we got another opportunity, right? Run on stops here within that larger price swing, right? There's another run on stops here. If we do assume that it's going to go lower and blow these lows out, this in here could potentially offer another opportunity for the YouTube model. I'm on the seconds chart, so if you don't use the seconds chart, these are the opportunities that you may end up missing. But it's very important to have a pretty strong understanding of higher time frame to lower time frame levels and how to navigate all that if you are going to look to try to engage on the seconds chart. Otherwise, it's going to be more complicated than it needs to be. You could simply just be on the 1 minute and still find the same things. Maybe this here presents this as an opportunity to short, assuming DXY goes higher, and we're not going to just stay in consolidation, which is a risk for right now because we've been so we delivered so aggressively. But yeah, this here could be a run on stops on the 1 minute, shift in market structure, price return back to a fair value gap right there. And then we also have this potential inversion here, right? The likelihood again of it turning around, consolidating, or just giving a full-on retracement is pretty relevant because of the simple fact that it's been so aggressive. And then of course, if that's the case and we want to still participate, you can always do what I'm mentioning here. Identify your rules, assuming it'll be a continuation if everything stays delivering in that capacity. and then just put your stop right above the fair value gap. And then, of course, if you take a loss, it is what it is. It's part of the risk-taking continuation moves after price has been so aggressive. That's why we prefer price to be close to the open price for the daily, like the daily range in the power 3. And then we also would like to take a sell in a premium given the current range, or a buy from a discount given the current range. Once we're outside of that, and that isn't part of the equation, we're in a discount right now, and looking for shorts in a discount is sometimes difficult. Sometimes it'll pull back on you. That's the risk you take if you're selling at a discount and buying at a premium in the overall range, right? But again, it doesn't mean that it wouldn't offer opportunity, right? Obviously, you saw earlier, in a discount, I still took a short, and it still worked out, right? We took out the minimums. I said once it hits this level, it'll probably stop, at least for a little bit, or fully retrace, come and stop people out. But clearly it, somewhat did that, but we've definitely stalled out. Now we're inside this macro, so if it is going to deliver down below this low, if it's something worth pursuing and it still drops, it should drop sometime in the next couple minutes and then attack the low, or maybe it's used to fully retrace. But the macro is so important because we've narrowed it down to a time when it should do one thing or another. Given what we see here, right, it's showing some convincing evidence that we could look to try to blow these out. But yeah, so we see a run above this high. So that initial idea I talked about definitely would have got taken out right up in this level. Well, the initial one was right here. I said let's watch this inversion fair value gap. We see that the rules kick back in alignment again, right? If this failed, you just wait again, right? Run on stops, shift in market structure. There's a fair value gap in here, right? So you can watch and see how that delivers. Mind you, this is all different opportunities inside of one idea, one narrative to spot price going lower. And we're not losing focus as far as what the higher time frames are showing. The 15-minute chart, that 1 hour chart, right? All of this is irrelevant if we don't know what those time frames are showing us to build further context behind this being a continuation YouTube model to short, right? We can't just be on the seconds chart and just assume that and just go off of what this chart's showing us. All right, we got to be able to use higher time frames in alignment with that assumption, in this case, for the downside move. Of course, with this current moment, we also got to factor in the fact that it's delivered pretty aggressively. So, there is a strong possibility for them to do what they're doing here, which I said could be the case once we hit this extension level and blew out all these lows. Or it could have a deeper retracement and try to get up into here, and then maybe later it'll look to deliver. Because we have the news coming out tomorrow, the federal fund rate, again, it could be a little difficult. It could be a little cloudy. And then you add on also the other red flag we've talked about today, which is the quarterly adjustment, right? So the start of the session was pretty beautiful, right? So now, because we're getting closer to the news, we delivered a decent amount already, had a large range. We hit some logical levels and already did a decent amount of work below some of these sell-side liquidity pools. There's a likelihood for price to now stall out. It does that. It goes in phases, right? It ebbs and flows. Displacement to consolidation, retracement, then displacement, consolidation, and then back and forth over and over, right? So, we always got to keep this stuff in mind, right? And any of these other entries, given all that we've seen so far, automatically becomes even higher risk because, again, we're in a discount trying to find continuation short positions. I'd prefer, if I didn't take any trades, I would prefer to see something at least on the 5-minute give some type of more meaningful delivery back above some of the highs, just so I can be certain that we've taken out reasonable liquidity points So I could pair that with the downside interest. Because you think like smart money, right? If I'm going to sell, I need to position myself above stops and then look to target the opposing liquidity. In this case, these highs were taken. We hit some decent levels of rejection, and price has given this strong displacement. If it would have failed to give this here, then obviously I would have needed to see a deeper run. But this has been a pretty strong movement. DXY is was continuously gravitating higher. Now it still is gravitating higher, but now we can see that things are opening up. At what time? Inside the macro, coming down to blow these lows out potentially. Right. So again, if we zoom in a little bit, right, you see run on stops here, assuming that the continuation would take place. The way you would be able to view this and see the continuation variation of the YouTube model is in here. Run on stops, shift back down in market structure below the low, left the fair value gap. We have an inversion too, other things we can add on, and then just the relative equal lows. We also see DXY finally opened up. And then, we decided to get back outside of the area in here. It offered this small movement here. I would have liked, or I wanted to, when this was delivering, I wanted to see something like this take place. That was in the 750 macro, or approaching it. We could see that, it took a little bit more time, but it still stayed down, below this low, or below this high, and it continued to respect things like this. Continue to also respect this, which is a higher time frame inversion fair value gap. All within the overall narrative of still being bearish, right? Any type of rally would have been a counter trend move. Of course, DXY is finally opening up in a much more meaningful way. It's not unreasonable or random that it's opening up inside the macro, right? Macros are not only important for the asset you trade, it's also important to see DXY make movements too. It's just an overall timing element that pretty much everything uses. But yeah, so the final target I wanted to see for the day has been violated. So I guess we will put a ribbon on it here. I will definitely, before I close out, I want to know if you guys have any questions before I go. So let me know in the chat. And if there is no questions, we will bring it to a close for the day. So just let me know in the chat if there's any questions. But overall, for an overview, for overview's sake, we called for price to retrace on this higher time frame, like a daily bullish retracement inside the downtrend, and that has pretty much solidified that assumption being correct with this delivery away from the highs. Of course, I do feel that there's a likelihood for us to take out these lows. So I'm going to continue to press on to the sell side. That assumption, being able to hold on to that narrative, offered many opportunities this morning for us to take shorts, whether it was up here or down here when we chose to wait for the macros. And also showcased the fact that we don't need to worry about any of this. It can deliver and we could still find opportunities. And we've been talking about continuations a good amount and how to identify them, the thought process throughout the call today. So yeah, with that being said, guys, I appreciate you guys hopping on. As always, you guys are greatly appreciated. If you guys get value from the content, don't forget to like the video, share the video, and tell your friends, right? If you think that they can either add to the conversation or if they can find value in the stuff that we do here. Either way, definitely send them an invite, share with them. And with that being said, we'll continue to see price favor shorts. I'm going to keep my eyes on the lows down here and beyond, because we see this bearish power 3 and it just seems like we're going to continue to drop. So until that changes, that's what our assumption will be. And yeah, with that being said, I will see y'all on the next call which will be on Sunday of this coming weekend, right? And yeah, let me know if you guys have any questions. But yeah, God bless, and I appreciate you guys' time. Have a good rest of your day.